Welcome back, everybody. Sive Morten is here with the ForexPeaceArmy.com. As usual, our daily update on the gold market. A lot of stuff has happened in a recent session. So actually, today it will be a bit unusual report. And why it is unusual, you will see a bit later. Actually, the core of the problem stands in recent tariffs that have been imposed by the Donald Trump of the Switzerland. As you know, that Switzerland is a major exporter of the gold bars and actually a producer or refiner of the gold. And that has led to the very specific performance on the market in the recent session, which makes overall situation is not suitable for trading, at least within the few hours, because it will be unsafe. The majority of us are trading with the retail brokers and based our trades on retail brokers chart. And now take a look at the surprise that you could see currently. Maybe on your retail broker everything stands fine, but for example, this chart is a FXCM broker. It's a really large broker in the way of the Hollanda, Saxo Bank, that's actually Ducascapi and others. This is a really big retail broker. Take a look at the chart. This is daily chart. Just keep it in mind. And now I switch to the correct chart, which is the Chicago Mercantile Exchange futures chart. And you just compare the performance that you see here. Actually, everything stands the same as it was recently, right? So now we probably should not worry about the grabber. Now it is eliminated because market closed above it, which is actually a bullish sign. But now take a look what we have on the Chicago Mercantile Exchange. Where with the FXCM we are right here, but gold market already not there. It's already 100 or at least $50–$80 above this level. So you're watching a retail broker chart and you think that gold price stands still around the consolidation that we discussed yesterday. But in reality, it stands absolutely in different place. And Forex brokers, retail brokers, will have to adjust their charts in some way. I do not know why they haven't done this yet, but it can't be different with the trading on in the United States, because the COMEX is a major trading platform and your pricing is based on a major trading platform charts and retail brokers chart. So it might be a very risky deviation in the pricing. So it might happen that if you imposed currently some trades, you could appear in a situation in a placed price on your forex chart on a retail broker chart could appear in a place where you do not expect to appear. Yes, it seems that the bullish trades are a bit safer right now because market stands higher, but who knows? What if market rates right now will start dropping and retail brokers will reprice it in the downward direction? That's also might happen. That's the reason why we think that in today's session, maybe in the morning, Monday and Tuesday, while the market will just match both pricing on the different trading platforms, it would be better to do nothing. Except, of course, the physical gold. If you would like it, and as we actually call it for this for the recent 2 years, that you should buy physical gold. You should buy silver bullions. You should currently, actually, in the last couple of months, we're talking about you should buy minor stocks. Because while gold market stands flat, miners are getting big profit. Now the difference between the extraction costs, total costs, and the gold price they were selling at it stands approximately 2 times. So extraction costs currently for $1,500, while gold is selling for the 3.5 thousands. So this is big potential. The results will go slowly in the statement of the mining companies. Last week we already talked about this. One example of the Newmont mining, some other, they're just providing stunning results in recent statements, and that will continue because currently the results of the high prices just start getting into the statements, and this will be constant process. So if you would like to create some golden portfolio in your assets, consider physical gold, physical silver, mining companies, and so on. But for a trading process currently, for today's session, I warn you that actually this might be a really tricky moment. and I prefer to stay aside for now. So other words, keeping is in just if we take a look just on the technical picture on the retail brokerage chart. Today I actually intended to say that this is bullish context because market's growing, erasing rubber flag. Market shows fast inside reversal here inside the bar, inside this flag consolidation. Reversal bar is almost erased with this upper direction, some kind of the early reversal. And based on the butterfly that we discussed yesterday, you can see market hasn't moved lower based on this pattern. It's just sharply has been reversed and returned back up. The one reason why the pricing might be different because, for example, FX team, if they provide the services inside the European Union where no tariffs, or they are taking the quotes from the London Metal Exchange, that might be a reason why the shape of the price is different. But there will be lots of other different retail brokers that take in the quotes from the Chicago Mercantile, and somehow they should match one to each other. I don't know how they will do this, but this is definitely a tricky moment for now. Speaking in general, if you're considering buying gold for a long time, I would say that currently overall context remains bullish, and we're preparing for upside breakout. That actually one we already have got on a daily weekly chart because our pennant is still here. Market right now is making an attempt at the breakout, which is positive, and gold has all chances to continue this performance. There are also some other important issues this week. We will discuss it in our weekly report as usual, but there are actually a lot of things related to gold to show you. So really big moments stand currently on the market.